Many financial advisors subscribe to the myth that if the professional fund managers have a hard time beating the market, then the little investor has no chance. Of course, since many of them are peddling mutual funds, it stands to reason that they would flaunt the products that they are being paid to sell to the masses. As you know, a typical mutual fund holds a diverse portfolio of stocks. Unfortunately, more than 70% of mutual funds underperform the market benchmarks like the S&P 500 over time. The odds are stacked against you beating the market by investing in these funds. As an actively engaged investor, you have several advantages over the big institutional players that will increase the probability of you consistently beating the market. The first advantage has to do with the velocity of your money. The concept of velocity of your money is based on the notion of being able to quickly move your money into better and better investment opportunities. As an individual investor, you are able to move in and out of the market much faster than any fund manager and take advantage of investment opportunities as they present themselves. Although you can never exactly time the market, you can easily move your money into an opportunity and buy a particular stock with an increased margin of safety when it comes on sale. You can also move out of the market on a moment's notice to take advantage of opportunities elsewhere, especially when one of your holdings has already generated a significant return for you. The second advantage that the retail investor has over bigger institutional players is the ability to create additional income streams. With a little knowledge, you can learn how to generate additional monthly income by selling covered calls on stock that you own. This popular option strategy could net you an additional 10 to 20% over the course of a year. As Michael Thompson says in Getting Started in Options, the covered call seller has fewer risks than others because it is a safe, conservative strategy. Even if the stock falls in value, writing calls provides you with downside protection. The third advantage that the little guy has is that you can employ better investment strategies than the big boys. As a small investor, you have access to certain investment strategies that can boost your overall portfolio performance well above the market average. For example, you can buy additional company stock at a discount to the current market price when you invest directly with the company through their dividend reinvestment program. You can then periodically sell monthly covered calls on the stock to generate some additional cash flow. These two strategies alone could boost your potential returns well over the market averages. And the fourth advantage is that you can more easily concentrate your holdings in market leaders. Having the flexibility to select and invest in only market leaders who are the best of breed in their respective industry gives you a higher probability of generating above average returns. The odds of that particular investment paying off down the road are much higher than diversifying across the entire market. Throughout Alice Schrader's book, The Snowball, Warren Buffett and the Business of Life, countless examples are cited as to Buffett's ability to concentrate his financial resources in buying just a handful of businesses with a high probability of long-term growth and exceptional profitability. So why do most stock investment portfolios underperform the market? It all boils down to your level of financial knowledge. What holds most investors back from making it big as a retail investor is not knowing how to make money in a particular investment vehicle, whether the market is going up, moving sideways, or going down. A well-educated investor is capable of employing additional strategies to create consistent cash flow from investments that appear to be going nowhere. Is being an actively engaged investor for everyone? Of course not. Most people invest passively, realizing that they will likely have to accept slightly less than what the broad market has to offer at the time. On the other hand, a knowledgeable active investor can consistently beat the market by employing various time-tested strategies that increase the probability of generating higher returns over time. Choose to be one of those investors. Start today by learning more about the exciting world of stock investing. To your ongoing success as an investor,